So far, this has not been a bad week for the big money center banks, JP Morgan, Citigroup, even Bank of America moving dramatically higher. Net interest margins, wow, what they make off your deposits expanded for the first time in ages. More quietly, we've also seen some very solid performance in some of the smaller regionals. So against this backdrop, what are we supposed to do with KeyCorp, symbol KEY, the parent of KeyBank, which reported a quarter that was viewed as mixed by the investment community? More important, as I've been telling you repeatedly, the main metric for the banks is the net interest margin. And Key saw this crucial line item decline by 10 basis points year over year, not to mention down 3 basis points from the previous quarter, which is the main reason I think Key got dinged down 12 cents today. Still, let's not forget, the stock's run up nearly 15% since we last spoke to the CEO back in January. And at these levels, I think it's looking darn cheap. 1.37 times tangible book value, discount to PNC, gigantic discount to U.S. Bancorp. So let's take a closer look with Beth Mooney. She's the chairman and CEO of KeyCorp to learn more about the quarter and her company's prospects. Ms. Mooney, welcome back to Mad Money.
Thank you, Jim. Delighted to join you today.
Thank you. Okay, Beth, I'm going to just quote a headline from Deutsche Bank because I think it's kind of what I've read. Second quarter 15 miss on higher costs, which more than offset robust iBank or investment bank. Think that's an accurate judgment? They do have a buy on your bank.
I will tell you, we had a really strong revenue quarter across our bank, including a record quarter in investment bank. And I do think that we were in line with what we expected, but the expenses came in at high side of expectations. But I don't think we should lose sight of the fact we had 4% revenue growth in the quarter, and that was very strong.
All right, so what do you think expenses going forward? You've got that integrating Pacific Crest, a firm that I talk about all the time. Opportunities there to be able to streamline, take some costs out, and be able to have more leverage next quarter?
Yes, as you look over year, any of those comparisons would not include Pacific Crest because we closed that transaction in the third quarter of last year. So we have integrated it. We're on one platform. It has gone very well, and as we look at it, it's a nice contributor to our performance going forward.
Will you have one integrated sales force, meaning that a typical large account will only be called on by one salesperson going in for the rest of the year?
Actually, what we do is we consider them specialists to our core banking platform in our corporate bank. So as people have technology needs or needs for technology investment bankers, we would bring Pacific Crest in. And they also come with their own set of clients where we have the opportunity to introduce them more fully to Key's products and capabilities. It's really nice synergy, and we're really pleased with the acquisition.
All right, we know Key's got that nationwide footprint. Any parts of the country really stand out as being good, and some maybe you're worried about?
As we looked at the growth across the board, it was strong in all areas, and both in our community and our corporate bank. So we had 10% commercial loan growth year over year, and as we looked at it, it was just solid revenue trends as well as growth trends across the franchise.
Do we have concerns? You know, when we were in the Marcellus, particularly the Utica area, which is a KeyCorp area, we know that there was boom, but now it seems like that area is slowed. Are you concerned about the oil and gas lending?
For us, oil and gas lending is a modest exposure. It's only 2% of our outstanding loans. And as we look over at the Utica and Marcellus shale areas, while investment has come down, production has remained steady over there. So as I look at it, I still think the drop in oil prices and gas prices is beneficial to consumers, good for businesses as lower input costs. And as I look at it from a credit quality and earnings perspective from Key, it's a modest exposure for us, and I'm not concerned about it.
How do you feel about new business creation, companies getting credit, and homeowners getting credit? Is the government giving you a hard time at all about trying to give people loans? I know you like the loan, who otherwise they might say, you know what, in the old days we would let you lend, but right now we're not comfortable.
I do not see constraints to our ability to underwrite and create new good business. We have strong standards. We've been growing our loans 15 consecutive quarters at this point in time on commercial lending. We've also grown our consumer loan books, well underwritten, well-priced, good loans, and we find that commercial borrowers as well as consumers have deleveraged. They have good capacity, and we do not see any constraints in our ability to support prudent growth.
Okay, Fed Chief Yellen on the Hill 2 straight days, making it very clear we're going to have some rate hikes coming up, maybe one this year. Comfortable with that for KeyCorp?
As we look at it, she's been pretty clear that the conditions are present, that there could be a potential for a rate increase yet this year, and we are modestly asset sensitive at this point, so we are positioned to benefit from a rate increase. But I think we're also hearing that the pace of rate increases after the initial is going to be some part of the story, and I think we're all hearing that it will be a very measured rise, and so we don't see any big spike in interest rates, but whatever benefit we get, we'll see it in our NIM, we'll see it in our net interest income, and we're positioned from an asset sensitivity point of view to benefit.
All right, Beth, are you comfortable with the kind of the investment banking Pacific Crest is doing? Because, I've always regarded you as a premier community bank, very easy lending to understand, very easy underwriting, because these are nuts and bolts, great American companies. The Pacific Crest companies tend to be a little bit more, let's say, exotic, to say the least.
Well, Pacific Crest for us was largely fits with our investment banking group within our corporate bank. There are some but more limited lending opportunities out of it, but it really fits well with our investment banking and capital markets platform, where we're able to give advice, create advisory capacities, syndicate loans, help raise debt and equity. So it really fits in that part of our bank more than it does from a generator of loans.
Excellent. Okay, Beth Mooney, Chairman, CEO of KeyCorp. I think we'll see better quarters the rest of the year. Thank you so much. Speaking with Mad Money. Good to talk to you. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.